Welcome, everyone, to this Legal Office Hours webinar. Today's topic, licenses and regulatory issues when buying a business. My name is Will Smith. I'm the host of the podcast Acquiring Minds and a partner in Minds Capital, a fund that invests in independent sponsor-led acquisitions. Attorneys James David Williams and Bill Barlow are going to host our session today. Bill and James David are partners in Barlow and Williams, a practice that specializes in small business M&A. They're at the front lines of our market, and their focus is helping searchers, sponsors like you all get your deals done. They also represent sellers, so they understand well both sides of the transactions in our market. We run these, the way we'll run this one today is, as always, Bill and James David brought a presentation. We'll go through that. Then we'll do Q&A. Use the Q&A button in your Zoom to ask a question. We have the chat turned off. We will be recording, so watch your email for the recording and the slides. We'll get that out this afternoon or tomorrow morning. And if you have a complicated question or a question that is really in the weeds about a live deal, your live deal, feel free to ask it. We may not get to it, but James, David, and Bill will see it and get back to you offline with an answer. Just make sure you're not logged in anonymously if that's what you're looking for. Okay, I think that's it. Guys, over to you, please.
Well, thanks everyone for joining us. As said, today we're going to be talking specifically about licenses and permits. And just to foreground this a little bit, every business needs to do some minimum registrations, register the business with the state, register with the sales tax authority. That's not what we're talking about here. We're talking about certain businesses to provide usually the services that they provide. Sometimes the products need to have certain licenses and permits. And I'll pause, by the way, I know Will just mentioned, I think we just dropped our LinkedIn and other socials if you want to connect with us.
Yeah. Yes. Sorry about that. I wanted to do that during the intro, but it's all now there. If you want to connect with Bill and James David, there are their emails. Connect with them on LinkedIn. And of course, you can see more on their website at barlowandwilliams.law. Back to you guys.
Yeah. So this usually applies to certain specific types of businesses. Usually construction, general contractors, trades, think electricians and plumbers, professional services, think accountants, healthcare, and healthcare can be more than just healthcare. A lot of times if they're providing some type of therapeutic or those type of services that can get involved, food, beverage, and liquor. So this isn't an exhaustive list, but these are often the type of businesses where if you see this, you should kind of raise a flag and think, is a license necessary here?
Okay. And so if you are looking at one of these businesses that is, regulated, it's worth going through the exercise as you're reviewing the SIM of, are you the right buyer? And we don't necessarily mean just financial ability, or you like the location, or you like the industry or whatever, but like, can you personally step into the role if needed? And a lot of times in these businesses, the seller holds the relevant license, not always. And many times you'd like it when the seller and a couple of managers hold licenses, but especially in the trades, right? It's often the seller. And so it's great if you have the license yourself, or you can qualify to get it. Some of these licenses, right, there's a qualification period of experience requirement or whatever. So at the very least, you need a plan, right? Your lender is going to insist on a plan as part of this process. You go the SBA route, or if you don't. And so relying on the seller is not a great option in many circumstances. One of the changes in the new SOP updates is that the uh, consulting period potentially for the seller is now going to be 2 years instead of one. But that does not necessarily solve this problem, right? Because the seller cannot be an employee, even though, right, they can be a consultant for longer, but they can't be an employee. And with many licenses, uh, it has to be an employee to qualify the business. So that, you know, it seems like the government allowed a fix to this potentially, but it's a narrower fix than that. So what you need if you're looking at one of these regulated businesses or a business where a license is required, it's just a plan, right? And ideally, plan A, plan B, plan C, plan D. At least get to plan C around licenses. Because what can happen, right? Even if there is let's say that the seller is not your plan, right? The seller's out, right? If there's just one key employee that holds the license, then you are beholden to that employee. And if that employee decides to hold you hostage, he or she may choose to do so, and you kind of have to take it. So, right, two is one and one is none can kind of be a phrase for these situations. So you just need to have a plan.
Mhm. And so when you're taking an initial look at these businesses, you ask what licenses do they hold and need to hold in order to operate the business? And crucially, who holds these licenses? So with a lot of the businesses we discussed, it's an individual license, like an individual attorney, which you would never buy, but plumber, contractor, etc. Sometimes, though, the license is actually held at the entity level. And you might think to yourself, well, great, if the license is held at the entity level, I can just buy the license or buy the entity and there won't be a problem. Unfortunately, it's more complicated than that. Even if it's held at the entity level, there can be change of control requirements. You might need to make an application to a board. Last month, we helped somebody where the license was held at the entity level, and they had to apply to the board prior to closing, disclose a bunch of things about the identity of the new owner, and get an approval of that before they permitted that change of control. Now, that was still the best approach because the alternative would be to apply from scratch, which would be like a 12-month process. And the change of control was more like, a 1-month process or a couple weeks process. So it still often is worth it to structure the deal that way, but don't assume that you're just getting a free pass because the license is held by the entity. And the other things, if it's held by individuals, what's the plan for retaining him? That's exactly what James David was talking about with having multiple people that have the licenses and having redundancies.
Yeah, and you do want to get to this question about who holds which license and which license is needed to operate early in the diligence process because it affects deal structuring, right? If the license is held by the entity, then you're probably going to be looking at a stock sale, right? Which changes potentially how you evaluate the tax treatment of the transaction, potentially, right? And it impacts certain other diligence streams, right? So this is one of the things, like if you are in this sort of regulated industry or licensed trade or what have you, right? This becomes one of the very early diligence items. Go ahead, Bill.
Yeah, I think we could probably skip over a little bit of these, but these are mostly just sort of the confirmatory ones, right? Like, is it in good standing? Who qualifies it? Is there some type of provision? Like, let's say you're dependent on that one employee leaves, right? Is there some provision allowing you to do some work in the intermediate period, right? And so these are more kind of in the weeds questions.
Yes, and they vary by license and it varies by state. So there's the only generality is that you need to understand what your particular target's licensing requires. but there are no kind of hard rules across the board, across different industries, or even across different states within the same industry.
One thing I'll just say about this, we talked about licensing board for change of ownership and other things. Also, if you're going to get the license pre-closing, right, which can happen, how long does that take? Are you going to sit for a test? Is it just a matter of that? Do you actually have to put in money? We're dealing with a live issue right now where there's a contractor's license. It's not that difficult to get it pre-closing, but there are some insurance requirements. And so, it could be bad if you pay for the insurance, get the license, and then the deal doesn't end up closing. But on the other hand, you don't want to delay closing too long because that could upset the seller, right? So these are issues that if you think about early enough, you can at least communicate that to the seller so they don't get a false expectation that you have the ability to close quickly if that's just not the reality of the situation.
Yeah, and a couple of other scenarios, different flavors of this. For licenses that require exams, right? Often they're only offered a few times per year, right? The, the bar exam that we took is twice a year uh, as attorneys, but there are others that are 3 times a year, 4 times a year, what have you. So we've had situations where people had to wait around to get an exam scheduled, and that took that was 2 months out, so the deal had to wait because the lender like, nope, buyer, you must have this license before we close. We had another situation where I think that the buyer passed the exam and the state just took forever to give us the results, and that delayed closing by a month. I won't name the state, but it was actually one of the. I was surprised by that particular state being so slow. But there are, right, again, this varies by state. It also varies by lender. Some lenders are more comfortable with you getting a license post closing than others. Some will not do it at all. They will insist on you getting the license pre-close. Others have been a little more okay with that being a post-close item. I think the overall trend, though, is that lenders have been tightening their requirements in SBA transactions, and so I would expect lenders to be more aggressive in requiring licenses pre-closing.
And to the point about who holds the entity and those things, this will affect deal structuring. Obviously, in the situation I talked about earlier where the license was held by the entity, we had to structure it as an asset purchase or kind of like a stock sale. But even if the entity holds the license, sometimes it can still be an asset sale. So the other example I gave, the contractor's license, it's an asset purchase. It's just that the entity making the purchase is getting the licenses pre-closing.
And
And
did we do an F reorg in the equity purchase deal or no?
yes, we did. And that created we had to explain a couple things with the licensing authority because they got they got a little confused, but we worked it out.
Right, so we were still able to get some of the asset tax treatment in that deal where we had to buy the entity.
Yeah.
So
It-
that may not always be the case, but it could be on the table.
And these are things, and this is why you want to, as James David said, you want to have this conversation early on, because if it's the case, you're going to need an asset purchase, therefore you're going to need an F reorg, therefore you're going to need to communicate with the license board so they understand that. Like all these things add time, and if you wait until the end and then you dribble it out, oh, I need this, and actually I need that, and actually I need that, that can put a severe strain on the relationship and erode trust with the seller. If instead, at the beginning of the process, you say, okay, this is what I need, here's the roadmap, and you keep to the roadmap, that instills a lot more confidence in the seller that, you actually know what you're doing and you're not going to have one other thing, come up before the closing.
Yeah. And again, there's myriad permutations of how this can work depending on the particular license, right? So we've discussed a very recent example that works one way, right? But there's plenty of other deals where it's worked different ways. Uh, Let me talk a couple of points on the second bullet about the seller being the qualifier, or seller staying in the business to keep the license. And this will be specific to SBA deals. So this doesn't apply if you're in independent sponsor territory. But if you are in SBA territory, right, as a rule, the seller is not going to be able to qualify the business in an asset purchase structure post closing, because, as I said, the seller, even though the consulting period is going to be longer starting in October, it's still a consultant role. They cannot be an employee. And so for most licenses, that still means that they can't be the qualifier, even if the lender would allow it. And then query whether a lender would allow it. And then if you are doing rollover equity for the seller, in an SBA context, that means you have to do an equity purchase. And so that's just the rules. The seller then has to guarantee the loan for a certain amount of time also, for at least 2 years, not longer. So there's hurdles that come with that. Not to say that it doesn't happen ever. We have seen a few, but it's a tough pill to swallow for sellers. So if that is the plan, is to have a seller roll in an SBA deal, then you need to get out in front of that very early and make it clear to the seller what it means that they will have to guarantee the loan for at least 2 years. Because if you spring that on them 2 weeks before closing, you've just introduced a massive amount of deal risk.
And so this is in the event you don't want to have the seller qualify, you need to qualify, employee needs to qualify, or some other person that joins the group, a partner of yours. But again, if we're talking about a licensed employee, that's risk, especially if it's just one. So as said, have a plan, have a backup plan, and keep in mind that certain license holders in certain industries are very much in demand. And so you shouldn't just assume that if you lose your key license holder that that'll be easily replaced. You know, if you're talking about a small geography and a certain number of people, that might not be an option.
Yeah, and with some of these, you can actually, again, depends on the license, but with some licenses, you can actually, there are databases that you can search and see how many people hold them in different states. That's not that common, but there are a few like that, so that you can do a little bit of the research that Bill's talking about.
So
Okay.
yeah, you go for it, Tim, if you want.
No, this is technical stuff. Go ahead. Technical with lenders. You can have it.
So there's SBA requirements and there's the lender requirements. So as SBA says you have to have all required licenses within 90 days after final disbursement. That doesn't mean that that's your lender. A lot of times your lender is going to say, nope, I need to have it before closing. And if you are relying on a key employee, that key employee is going to need to be screened as well. So if there's like problems in that key employee's past, he has a criminal history or other history, you know, then that could potentially be an issue.
And theoretically, right, the key employee could also be made to be a guarantor.
Yeah.
Right. We don't see that often, but in theory, right, there is the ability under the rules for the bank to add additional guarantors to a deal, which would add a whole nother layer of, because then you have a key employee who may not even have any ownership, right, who is now still guaranteeing things, which would be a little scary to have that be plan A. Okay, so now we we've been talking about licenses. This we're going to shift a little bit to certifications. So certifications are things from third-party certification bodies. If we're in the manufacturing context, okay, something has an ISO certification. We've dealt with this in certain things with federal contracts around ITAR, which is arms trading. So components of manufacturing parts, but ISO certifications are often very important. Although this can be, a minority-owned certification or a women-owned certification too. And there's just by that kind of range that I just gave, and there's several more flavors of this, right? It depends on what is being certified, right? So is it the owner that's being certified, right? In the case of the minority ownership or the women-owned business certification, is it the location, which can happen in some of the manufacturing contexts that a facility is certified to meet certain standards? And then there are some ITAR. The ITAR thing, for example, is one where you have to notify the federal government there's transfers. So again, it depends on what the business has and what, and that dictates the specifics of the process in order to transfer it. For things like the women-owned or minority-owned, it may be that those aren't going to transfer, right? It may be that the current seller qualifies for one or more of those, and you as the buyer will not. We've had scenarios where that happens, in which case you just do diligence on what percentage of the business is going to be lost as a result of that, and you build that into your model. You would not consider doing that with an ISO certification if you're in a manufacturing context. But again, there's different level, different types of certifications that could be in play.
Yeah, the good news with certifications is that most of the time in manufacturing, at least in my experience, if you are continuing to run the process the same way that you were, then usually it's a relatively simple matter of somebody coming in, inspecting, confirming that everything's staying the same, and then you just kind of go from there.
Yeah, and a lot of those manufacturing type certifications have to be re-upped every year or 2 years or 3 years. So it's not uncommon, frankly, that the sellers have maybe let them lapse. And so you just kind of re-up them as part of the whole transaction process anyway.
Yeah.
Anyway,
Well, great.
so that is the end of the presentation. It's a shorter one this month than we did last time, but as we start to populate questions, before I hand it back to Will, we are Barlow and Williams. We are exclusively M&A attorneys. We work with searchers, sponsors, and sellers. All of our engagements are on flat fees, and we use milestone-based payments. And those are always scoped to the particular project that you're working on. So we'll hand it back to Will, and we'll answer some questions. I will note I will probably be a little bit slower than usual in responding to individual questions post-webinar because I am traveling. So.
And one other thing I'll just note is, because this is an open office hours, if we don't have enough questions on licensing and permits, if you do have questions on other legal things, you can also feel free to ask them as well. I will say preliminarily, if you're looking for questions on the SOP updates, there's going to be an excellent webinar on that in a couple days. So we're not going to really touch on that too much because we don't want to take the wind out of Heather's sails. But other questions, we're more than welcome to talk about.
You can still ask the SOP questions. We may just not answer them.
Yeah, that's fair. That's fair.
Bill, generous of you to plug another vendor's webinar. I appreciate that. But yeah, everybody, the big SBA SOP changes you've probably seen talked about. Heather Anderson is going to be giving a webinar on what all of that means in 2 days, this time slot in 2 days. Maybe I'll put a link there, but you can find it on the Acquiring Minds website. Good stuff, guys, as always. Could you give just a little bit more on the milestone, the flat fee and milestone-based payment and how it's scoped to the project? Maybe just elaborate on that a little bit more for people.
Yeah, so we'll take a typical, there's no typical deal, but a standard engagement will have either 3 or 4 milestones. Right? Those milestones will be things like the start of the engagement, when we start major work streams along the way. The final milestone is always closing. And sort of the fee is paid as we go. If we don't get to a certain point, because deals do die, then you only are out the money that you have spent for the milestones reached. And as a policy, we credit the balance of the first milestone to a subsequent transaction if you work with us on the next
And it's in thirds generally, third, a third, a third.
one. No, it is not.
It varies. The first payment is smaller, right? And the reason for that is we really just need to do some initial legal due diligence. We want to wait until quality of earnings, financial due diligence is done before really spending a lot of money on legal. And so the other chunks are larger. So that initial engagement is short. We just look for red flags, make sure that we help tighten up the LOI, and make sure you don't spend too much money on legal before you've done the financial and business due diligence.
Great. Thanks, guys. Thank you for that. And it's a great searcher-friendly, sponsor-friendly payment structure.
Yeah.
And audience, there again are links to connect with James, David, and Bill. Okay, let's get to questions. So how do you think about if two partners, two searcher partners, they partner together to buy a business, and one of them has the required licenses and the other does not? How to think about that, restrictions, et cetera. And this person is trades oriented.
One, I think you're in a really good spot because having at least one person that's a partner that can qualify the business already puts you ahead of a lot of other people in the space. So that's excellent. Two, you do need to make sure you have that operating agreement between the partners worked out, because one of them, potentially has more leverage than the other. And three, you also need to have somewhat of a backup plan, right? Because depending on what your strategy is, I mean, again, nobody likes to talk about the real downside situation, right? But like, what happens if that partner either dies or just decides that they're not interested in the business anymore, and all of a sudden the other partner is left holding the bag, right? So that can be your plan A, but as James David said, have a plan B, have another employee, have a plan C. What would it take to hire some people? I can also just tell you anecdotally that when it comes to the trade specifically, a lot of people, when we think about businesses, what's the hardest thing? A lot of times we think about sales, getting money in the door, right? In the trades, a lot of times it's actually about, can I get qualified employees that have the skills necessary to fulfill the existing demand? And so, just have a little bit of a mindset shift when you're looking at that, prospect.
Yeah, let me add a few more notes. I mean, if you do have a partnership with an SBA loan, right, the operating agreement between the two partners is always key, because generally you're both signing up for personal guarantee, right? So that needs to be managed. In the trades specifically, there may be a licensure requirement that the person who holds the license be the majority owner also. That can be the case for some licenses in some states that that a license holder must be a majority owner. Uh, so that may be forced upon you by the structure that you're operating, whether the regulatory framework that you're in. That's not to say that you can't get to the sort of control that you choose, but you may be forced into majority ownership uh, by the license holder.
And to that point, something to keep in mind is your thesis to stay in one state? Is your thesis to do a rollout in multiple states? Because if it's multiple states, maybe the first state you don't have that majority requirement, maybe another state you do. And so just kind of thinking through those issues.
Bill, that point that you said about um, generally we think about sales as the challenge in business, but in the trades, it's actually often not generating demand, but supplying the services, meaning hiring. Where were you going with that? How does that play with licenses and regulation?
Well, I think maybe I just said that because when you're in that mindset, I think it's good to keep that mind just in terms of your overall business strategy, right?
Yeah.
I mean, as long as you have a license holder, even if you struggle to find other people, you probably are going to be fine. But um, you know, the other thing is that you have to worry about quality control. And again, this is less almost a licensing issue as much as like an operational issue, right? Because what if you have one true master electrician or master plumber, but you have like a lot of inexperienced other people that are doing that day-to-day work, right? Like maybe the person who's the certifier isn't going to feel comfortable if your plan is to use one master electrician and then just like a bunch of, younger guys that don't really know what they're doing. And what if they can't provide the oversight? So that's not so much a licensing and permitting issue. It's more like operationally, you need to just be aware of it.
Yeah. People should listen in a couple of weeks for an interview on Acquiring Minds with Rob Brooks, who bought a small HVAC business in Sarasota. And we actually don't talk much about the licensing, but the story is remarkable how much he's grown it. But the point is, he took it upon himself to learn HVAC as much as he could. Did tons of ride along. I mean, was in attics with his guys. Had a bit of a commute to the business that he bought, and so like an hour or so. So the 2.5 hours he was in the car every day for months, he was learning HVAC with conversations with ChatGPT. I mean, really, really remarkable. But obviously, not every searcher is going to be prepared to do that. But after listening to that, you might think that you should be prepared to do that. It's worked for him. But anyway, one of the other points that he makes in all of that is, yeah, I understand working on the business, not in the business. But in a trades business, a lot of my ability to lead well is the respect that I've earned or not from my team. And being able to know the trade and talk the trade is a big part of that. Being able to, and also in recruiting future tradesmen. So there's all of these intangible benefits and leverage that you gain by learning something about the trade, or learning as much as you can about the trade. So, and it feels like the SBA is just nudging this market toward that. Like the SBA kind of wants that from us. So.
Yeah, I think the SBA, not to be pejorative or anything, but if you're going into the trades and your only background is sort of white collar MBA consulting, like not to say you can't do it, but you have to be willing to put in that type of effort. You know what I mean? And yeah, they want to see evidence that you're actually committed to that.
Yeah. Great. Questions are coming in. Okay. So with respect to a licensed employee replacing the seller as the ongoing license holder in an SBA deal, you noted that state law may or may not require that employee to, quote, join the buying group, as you said. You guys said. So does that mean they would need to be given an equity stake in the business? I assume that's exactly what that means. And then would they have to PG the loan? Do you guys have any examples you could share, cases?
Yeah.
It's multi-pronged. Some of it is essentially a lender thing. It's about them being an additional guarantor. If they have to be an owner, if it's a total, if you're doing a total buyout, and they have to be an owner, as long as they don't have to be, if they can stay under the 20% threshold, then they won't have to necessarily PG unless the lender requires it as a supplemental guarantor. All right, so there is a way they could maybe get 5% and not have to PG in a total buyout. But some of this, and it's not that common really, that the qualifier has to be an owner. There aren't a lot of situations where that's the case, frankly. There are some. But even if it's not, right, there may be, and even if you do the 10%, 5 or 10% ownership, which may be a good idea regardless as a retention mechanism. But then there may be a separate conversation with the lender about whether the lender wants some sort of guarantee, whether it's limited or unlimited, from that key employee.
And something else, a structure that I think is worth bringing up here is managed service organizations, MSOs. So this, frankly, is not something you're going to see as a searcher using an SBA loan, probably at all. But if you are an independent sponsor territory, what can happen is you can often have the licensed professional who owns 51% of the business that does the professional service that you are providing to the client. And then you have a lot of the revenue go towards another organization that doesn't have to be owned by the license holder. And that's how a lot of private equity roll-ups work. If you're talking about the healthcare space, you're talking about the accounting space. And so you have specific structures, and usually it's the majority owner of the practice having to hold the license, because that's often how it works. And then there's a management organization where a lot of money, of the actual money, is funneled to that.
And sometimes those get even more complicated about sometimes the entity must be wholly owned by licensed professionals and separate arrangements too. So there's different flavors of that. The structures also look a little bit different across different industries.
And one other thing I'll call out is that, especially in accounting, there's often a differentiation between types of work you do. Like if you are an accountant, usually you can't, like attestation work, tax work, certain types of work, you have to be an accountant to provide that. But then other types of work, often if you're just, preparing financial reports and kind of keeping track of things, those often do not require a license. So sometimes you see like a licensed business kind of being broken apart into the license component and the part that doesn't require the license. So all fun things.
Could you talk about what is the common or best strategy for securing licensing for a trades business where the owner holds the license, but there are several employees that have the required work experience to hold the license but don't have it yet?
Yeah. So obviously, if you're an independent sponsor land, you just have the seller hold it until the employees then qualify, right? If you're an SBA land, it's more difficult. If you don't have the license, you will often ask the question, how quickly can those employees get to take that license? And often they would have to do that, kind of as a pre-closing thing. Unless some licenses do allow for an outsider to provide a license for a period of time until they get up to speed. And in that case, you might do that as sort of a temporary measure until your employees can take the tests.
But in all likelihood, you're looking at a closing condition, right? A pre-closing requirement that at least one of the employees have the sufficient credentials and licensing to be able to qualify the business and all of its operations.
Yeah.
And you probably want that.
Yeah.
Even if the lender doesn't require it, you probably want
Douglas says, I have a professional engineer license and I'm considering MEP, which is commercial HVAC, electrical, and plumbing, MEP service businesses. Would my professional engineer license make it easier for me to obtain the licenses needed for these trades businesses, or even maybe exempt me from certain requirements that are obstacles for others, but maybe not for me?
It would in some states with some licenses. It is sadly the only answer we can give. You look at the particulars, and often in the trades there's sort of a mix. Like if you have certain degrees, then the experience requirements drop, or maybe even go away completely before you can sit for the exam. So like I have seen it, but others it doesn't. It depends on exactly which credentials you have. It's the sort of thing that you can look up and establish whether it's the case or not fairly quickly, but it's not a generalizable answer to the question.
Great. Question for you guys. Not sure I understand this fully. Will you review contracts drafted with Claude by someone who's not a JD? So the buyer is not a lawyer, but they've drafted their contracts with Claude.
No. So AIs are great tools, and we use AI ourselves. We have a policy that we give. Some people get the mistaken impression that if they draft a document using AI, that's somehow taking work off of our shoulders. And the answer is it would actually be putting a lot more work on our shoulders than it would be to use our forms. And so, we're happy that clients are using AI, and we kind of give you ideas of how to do it. But no, we use our own forms, which have not only been reviewed multiple times by AI, but also have been battle tested multiple times. And it's always going to be better to use like a form that we've had that's been reviewed by AI 100 times and battle tested 100 times than going to AI and just asking, draft this form on the fly.
I like it. Can you speak to the issue of whether you can rent a license from a license holder that is not active in the business? I've had a couple brokers and franchises mention this, but I don't believe it would be legal, at least not in California.
In California, it is not usually. There are some licenses in Florida where you can do this.
What exactly would this mechanic look like, James David?
You have a contract with someone, they're an employee or a contractor, and they provide a service. Their only obligation to you is to do the supervision that's required as a result of their license. So we did one in Florida at the end of last year, where I think the lender insisted that he be an employee, but it was a custom employment agreement, $1,000 a month or whatever it was. Just basically all he did was qualify business. But in California, they've tightened. California is much tighter on this, and even in Florida, where we did that one, that's not for every license. It's only that particular license that it was available for a limited subset. But in California, this does not work anymore.
Because this sounds like a great solution. But people should not pin their hopes on this.
And again, right, it depends on which state you're in and which license we're talking about. But generally, California.
Okay. Okay. Bear with me.
No problem. Now this is a little lighter than usual. We gave a shorter presentation, so.
If there's a key employee in the business that is intended to be the license holder post close, for example, a master electrician that will hold the license, how best to approach or recommend this person to enter into a long-term employment agreement? How to incentivize them?
So I think a couple things you want to keep in mind is number one, your seller is probably going to be really sensitive about conversations that you're going to have with a key employee. On the other hand, you're going to want to have this conversation as early as possible for these very reasons, right? And there's a couple different things you can do, right? You can have retention bonuses as an example. And you could potentially bring them on as a partner. You could potentially increase their salary. There are sticks in theory, non-solicits, those type of things. Non-compete's an extreme example, but I would say have a conversation with the seller about the best approach, because one, the seller is going to be very sensitive towards it. Two, the seller is going to know their employee a lot better than you are, and they might have a better idea about what that particular employee really wants. And some employees, what they really want is job stability. So they want like a multi-year term agreement that they know that they're not going to get fired, right? And maybe that's exactly what you want because you need them, Other employees might be more motivated by money. And so, that's what I would say is have a conversation with the seller.
And when you do get to have a conversation with the employee, talk about the future, talk about their dreams, talk about what they want. I talk about what is their vision for the next 5 years of their professional life, and listen for the subtext. I don't necessarily just listen to what they say, but listen to what they're really saying. Because if they may be signaling that they want to start their own, right? They may be getting that itch. They want to be their own boss, right? You may be getting that feeling. And that's potentially a problem. It may be that really they do just want the stability, and that's great, right? And we talk about that. It may be that they want to they're excited by the prospect of growth, right? They've got all these new initiatives that they want to do. Right? There's all these process improvements they want to implement. Great. And we talk about how to empower them to do that. But you want to have when you do get in front of them, right? You're going to have to establish your credibility, one. But two, right? What is their plan? What is their vision? And does it align with yours? And that's one of those kind of soft diligence things that you could, if you get it wrong, you could look back on, and that could be, I really should have known at that point. And I hope that doesn't happen. But that's a chance to at least potentially see the huge downside scenario before buy the business.
Guys, so this is seems like making a sorry. This makes it seem like, there it is. This makes it seem like buying a trades business is very difficult. Of course, we've had countless people who do on the podcast, and it's the most common kind of category where people are buying businesses. But as the SBA has tightened things down, have you noticed searcher interest fall off? How have you seen this play out on the market? Because if I'm listening to this webinar, I'm kind of like, boy, if I'm not kind of already adjacent or in the trades, I should probably direct my attention elsewhere. This is just going to be really hard to make happen. And even if I do make it happen, there's just going to be all this risk tied up in a single employee or two.
Well, some of it is us being attorneys, right? We see risk everywhere. That is our job in some ways. When people come to us with a trades business as a target, we're going to grill you about your background. We're going to grill you about your plans around licensing. We're going to be probably more aggressive than your lender in asking questions. And that's for your benefit. And we don't want our clients to fail, but the people who get through that process, right? And sometimes we tell people no at the end of that process, like we're not going to help you. You can find another attorney. This is just a personal thing. We have enough clients that we can do that. But the ones who make it through that process, they have a plan, and let's do it. But yes, there are wrinkles to every sort of type of business. The trades businesses, like, they just tend to be more concentrated in these particular areas.
And I think another thing to keep in mind is that we say trades businesses, but that's a really broad category, right? Like HVAC doesn't necessarily require licenses, right? Which is one of the things that's attractive about it. And bookkeeping, just bookkeeping, doesn't necessarily require licenses. And so when you're looking at these targets, I think, and landscaping is another example, right? Generally doesn't require a license. The downside is if it doesn't require a license, then it's also open to anybody, right? Landscaping is an excellent example where there's extremely lucrative landscaping roll-ups. There's also the problem of, well, why wouldn't you just start it yourself and kind of go from scratch and like those sort of things. So I would say, rather than just being completely deterred, I would say just know which, again, is this a trade business that actually does require a license, or is this a trade business that does not require a license? If it doesn't require a license, to the point of the earlier discussion, you should still know the business, right? You're still going to need to roll up your sleeves and figure it out so you can talk about it, but you won't have the legal difficulties that we talked about here. So there's still opportunity for people that are willing to roll up their sleeves in places where the licenses aren't necessarily required. If you're talking about electricians, plumbers, I'll be honest, I think it's gonna be difficult for a lot of people to do more of the heavily regulated ones if they don't have that type of background. And that's just the reality of the situation. If you can make it work, if you do have that background, lean into it, because that's a huge competitive advantage. You've just cut off the number of other potential buyers significantly. So I would say, if you have the opportunity, lean into it, because that moat is an excellent thing. So.
Yeah. I'm also just, thinking back to Rob Brooks, the person I mentioned earlier. He has just a true native interest in this stuff. So he came from a 15-year white collar career, but he was always fixing stuff around the house, sort of thing. Dad was a GC when he grew up. So he was and in fact, earliest days of his career, he also was a tradesman, a carpenter. So he's very comfortable in that context and likes the work. So he really took to the challenge of learning HVAC, and that's not going to be a lot of people. But I do just wonder if it's a good screen, as somebody is looking at trades businesses, if it's a good screen for themselves. Like, if you can imagine just immersing yourself in that trade for a couple of years and coming, and not forever, you don't have to be a lifelong plumber, but enough to kind of do a deep dive in the trade and learn it respectably and emerge on the other side as the license holder for your own business, as the primary license holder, understanding the business, understanding what your technicians do, having the respect of your technicians, being able to recruit people more effectively. It seems like a great formula. But I think a lot of searchers just really don't want. This guy that I keep referring to is the exception, not the rule. Many searchers, even if they think they're comfortable buying a trades business, buy a trades business, I don't think they actually intend to learn the trade. But if you can, or you're open to it, I think it's a really interesting way to approach this whole project. So
I feel like a lot of times sometimes people are looking for shortcuts, and this isn't a shortcut. It's like it's a long way of doing something, but then once you get to the other side of it, it's more consistent. Yeah.
Yeah. Yeah. That's well put. Yeah. And frankly, at my age, I find that 2 years goes by like that anyway. So it's not.
It'll be over before you know it.
Yeah. All right. We're at 58. So just a couple more. This one you touched on. The question is, what's your recommended sequence? When in the deal timeline should regulatory diligence start relative to LOI in the SBA process? I think you've answered that, but let's hear it again.
Yeah, I mean, as soon as possible. So a lot of times you're not going to get to this pre-LOI, but post-LOI, it's going to be one of the early things you ask for. It's sort of parallel to your lender's underwriting. They're going to ask for things. You probably want to know it before the bank would ask.
Yeah.
But it's going to be one of your early post-LOI.
And frankly, whether the business needs licenses or not is almost something you should know as you're submitting the LOI. You know what I mean?
You should know the general contours. You may not know all of the specifics.
Yeah.
And didn't you guys also say earlier that like the more you know, the better, because in theory, it will affect deal structure. So in other words, if you have the information, it could show up in your LOI.
Yes.
Right.
But you may not
have the information.
Yeah. Like okay, well, it's this sort of business. It's an electrician business. You know, the seller is a master electrician, but you don't know if there's other people underneath, for example, right, who hold it. Right? That's one wrinkle. Or, the particular license, there's not a great database to look up what entity, right, holds it. So if you can get the information, do so, but don't expect to be able to pre-LOI.
Yeah. But the key takeaway is as soon as possible, as soon as you can, because this is.
Yeah, it's one of the
crucial.
things that impacts deal structure, and things that impact deal structure we want to get to early.
Yeah. Yeah. We'll do one more question, but everybody, audience members, just there's James, David, and Bill's contact information one last time. So connect with them on LinkedIn, email them to start a conversation, learn more about Barlow and Williams at their website there. Okay, final question begins with, you guys are great. Thanks as always, Heart. So there you got a fan here.
Thank you.
Have you closed any transactions using ROBS? Multiple part. Have you done any ROBS deals? And then if so, are ROBS a better fit for a trades business given the C Corp requirement? Then there's more parts to this, but answer those two first, please.
Yes, we've done it with ROBS. No, I don't really feel like it matters too much. In terms of deal structuring, you're forced into a C Corp structure, but you can, with a C Corp, then buy whatever entity, you need to buy, or assets that you need to buy. So I don't really see, that as bleeding in too much.
Okay. So with the C Corp requirement of ROBS, that does not mean that the transaction is necessarily a stock transaction. It can still be an asset transaction.
It can still be an asset transaction. But I will say that, if you're looking at ownership requirements, right, of like licenses, that ROBS entity has to own, and you cannot have other partners coming in with preferential like payments, whatever. And so it will make life harder if you're not already fulfilling the majority requirements for the license,
Yeah. But it just adds a little bit of complexity, but all of the options are still available. It just may require a parent subsidiary relationship.
Okay.
Where it actually can get difficult is if you need to have another partner coming in to the transaction who is not putting in money. That can be difficult under a ROB structure because there's strict requirements about how much equal treatment to the 401k plan compared to other people, but that'll get too technical. Talk to us.
Great. We'll end it there. You guys will be back next month, so everybody keep your eyes peeled for the topic for next month's legal office hours. We've been recording. We'll send you, audience, the link to the recording and the slides that you just saw later today or tomorrow. And thank you, everyone, for coming. Thank you for your attention. And Bill and James David, as always, guys, great work. Thank you for a great presentation. And see you in about a month, if not sooner, in Durham.
Oh, that's right.
Bye. This ends the webinar. Bye-bye.